every session without fail, we've got to start with that mantra, because that way we make sure they're always recorded. So let's look at the overall cycle first and foremost, okay? Because that's where we like to start. And I think you guys can probably see it as well as I can see it, that we had a pretty lovely weekly cycle this week. So accumulation on Monday. Not that. Oh, no, wrong one. We then had a manipulation on Tuesday, Wednesday. A distribution from Wednesday evening all the way through to Friday lunchtime. And then, of course, our beautiful close here. It doesn't get much more perfect than that in terms of weekly cycles. And I know some of you guys have struggled, apologies. Some of you guys have done your weekly cycle courseworks. And yeah, at times the weekly cycle isn't very clear. This is a pretty picture perfect example of the weekly cycle doing exactly what the weekly cycle does. Now, the reason why this was a little bit difficult this week, and I'll show you why, is because we took out weekly liquidity here, okay, dead weekly, and we took out some daily liquidity over here, but then it seemingly reversed out of nowhere. And I know a lot of you were kind of questioning this and expecting the market to continue bearish. Now, a couple of things. Who would like to tell me or show me where our current range is? Trading range, higher time frame trading range. Who would like to annotate my chart for me?
I will.
Go on then. Go on there, Ralphie boy.
How do I...
I'll probably go for, is it like up to 60?
Beautiful. Yeah, beautiful.
Yeah.
Okay, beautiful. Okay, so that is our current bearish range, all right? Based upon higher time frame structure. So it's probably a bit clearer, to be fair, on the daily, as you can see there, okay? Pretty beautiful daily range. We've got this structure coming down, pretty picture perfect. We've got this lovely range. Now, as you can see, price opens below, let me get rid of the range, now we know where it is. Okay, price opens below these external liquidity points, which are our last range lows. So what should we be being prepared for if we are below external range liquidity? What should we be being prepared for?
Shift back up into internal liquidity.
Why?
Just taking liquidity.
Yeah, the liquidity cycle.
Because the liquidity cycle, exactly. Okay, we are below external liquidity. We know from our learnings, our teachings, that the liquidity cycle is once external liquidity has been taken, then price at some point, not immediately, will gravitate back towards internal liquidity, and it will use that internal liquidity to fuel its move back bearish if this bearish momentum, this bearish trend, these bearish ranges are set to continue, which obviously we don't know.
If you look left though, if you look left, you've got a massive go below the lows you marked, go left.
Yeah.
Yeah. So I always get really like cautious. So I always that massive fucking candle up there below them lows.
Yeah.
It would be like not very confident on them lows to hold.
What, these lows to hold?
Nah, so the lows you marked, yeah.
Yeah.
But you've got that massive, like, just fucking gap candle that's just
Yeah.
fucking expanded up. When you've got that, I never, like, them lows there, I never really, like, looked, like, I never think there's going to be a reversal on them just because of that massive candle below.
Well, yeah, this is why we're here. This is what I'm about to explain, Dom. So listen up, all right? Listen up. Okay, cool. So we have, obviously, an understanding that the weekly cycle should, doesn't always, but should give us a low or high of the week by Tuesday or Wednesday. So if this market is opened low and started the week printing lower prices, then I had a pretty what's the word I'm looking for? I was pretty confident that at some point we were going to create a low of the week, because I'm already so what you have to do as a day trader is, or any trader really, you have to build a narrative around the marketplace. You have to, it's not just about we've swept a liquidity and then had a reversal pattern, so I'm going to enter. It's more about what is the overall picture of the marketplace? What can I decipher from this market, and where is price most likely to go next? Well, I know I'm below these external liquidity points. I know I've opened low and I've continued lower. I know that my weekly cycle tells me that Tuesday or Wednesday I should be prepared for a reversal. Now, that doesn't mean that I start buying from here necessarily, okay? But what it does mean is that we get prepared for the fact that that might happen. And that preparation means that we can start expecting higher prices, okay? Or at least seriously considering it, because we don't expect anything, of course. So when we then start reaching liquidity points like this and this, we need to assess whether a reversal from here makes absolute sense. And I'm going to explain how you do that in just a moment. Now, where we can bolster down on this knowledge and this information is using the DXY. And this is why the DXY as a filter, as an additional confluence is so helpful. So those of you who bothered to watch my analysis video, so I get a lot of questions every morning about stuff, by the way, that's in my analysis videos. Go and watch them. Whilst I'm always happy to answer your questions, guys, go and watch the videos before you've asked the question, because it's more than likely that I've put the question in there. Now, if you've got a question before I've posted it, then obviously send me the question. But if I posted the analysis, please watch the video first, because 9 times out of 10, what you guys are asking is explained in these videos, okay? So I had a couple of key levels that I was keeping an eye on. So for me, I quite like these banking levels, okay? They can be quite reactive. So we had that level at 100, okay, that we were paying attention to. And on Monday or Tuesday, I think, yeah, we hit that level. So here on Tuesday, we hit that level. As you can see, basically no reaction from it. Now we had this larger range up here, okay, which was very clearly where a lot of selling pressure came into the marketplace, okay? We had a lot of selling pressure into the marketplace like this, all right? And in that selling pressure, we know that there would have been a lot of liquidity, a lot of buys, sells. There'll be sellers who will be in profit, who have taken their profits out. There'll be buyers who will be in negative equity that will need to have their orders settled. So price is obviously gravitating towards these levels. And what we did have here is a very important key level here. Bang on that 100.250 number. Now, until then, the next piece of liquidity we've got is up here. And the reason why I'm not including this as liquidity is because this is a gap between there and there. And therefore, the selling pressure from here has been filling in the gap rather than sellers going into the marketplace in this location. Which is why if you have big candles like this that have just opened high and then immediately started dropping, I personally wouldn't class that as significant liquidity, because that's not... Often it's not humans who have placed those trades on a Sunday evening and then place their stop losses above there, okay? It's normally created by a gap in price of some kind. So just be conscious of that. We will, of course, keep an eye on that level. But for me, my next liquidity level is up here. Now, if you were a trader trading EU and you had been... Oh, wrong one. Okay. And you had been in shorts from here and here and maybe here, and now price is down here, what is it you're likely to start doing?
Taking profit.
Taking profits. Why? Why are you going to start taking profits?
Price has got to retrace to rebalance.
Not necessarily that. Look at where we are in comparison to the dollar.
Oh, yes,
if you think institutional traders aren't trading EU off the dollar, you're mad, mate. Bloody mad, mate. All right? If the dollar's taken key liquidity and clearly started rejecting it, institutional traders are going to start taking profits out of EU. Doesn't matter whether EU's reached its own liquidity. Remember, this is the dollar. The dollar is the driving force, and they are 60% of each other. So if DXY is taking liquidity, then EU is going to probably start closing off some of its profits, especially when we've taken out, lots of profit, remember, will have been taken here and here as well, because we broke below those levels. So you've got all of that liquidity that's gone on EU, and now you've reached a key level on DXY. That's why price will start often reversing from these levels, okay? And seemingly out of the middle of nowhere. Now, for those of you who are trading EU, okay, I do fully appreciate it was quite complicated to trade. And let me explain to you how you could have traded it this week. So we had, to be fair, some nicer trades on USD CHF, as you guys know. We had, I don't think, any trade on Monday. I mean, I wouldn't class that as a false break. That for me would be just far too high. It does technically give us a first break trap sort of feeling, but it's not a situation that I personally would like to trade. There's one that's a little bit better here on Tuesday, and I know some of you guys took that. You still, in my opinion, had a bit too much of a follow through on that one. You've had a close above, a break back below, and then another close above. So look, maybe we were reaching for some slightly higher liquidity potentially. I would say that's a little bit more valid as a sell setup, okay? But you know, it's still a little bit iffy and a little bit difficult to trade. This is why personally I was looking at other pairs. I think I traded gold and GJ at the start of the week. I definitely wouldn't say these were perfect entries. If you did take them, they were a little bit high risk, because remember, we want the false breaks and the traps to, you know, to wick above and then break back below. That gives us a real clear indication that we've got a false break trap. If this level isn't able to, if price isn't able to close above this level and then follow through, then it means that this level here is rejecting price. Liquidity is being grabbed, and then the selling pressures coming back into the marketplace. When you have these quite clear closes above and like continuation and follow through, that for me feels a bit more like a first break than a false break now, even though they are technically the same thing. Well, not the same thing, but you know what I'm saying? They're one in the same at times. That because it didn't reject price, and that because I wouldn't class that as an external liquidity point, for me would have been a little bit of an iffy one, but I would understand that if you took it. Now, price came down here, okay, and left all of this liquidity here untested, as you can see, okay? We had a little bit of a wick above, but then nothing. Now, we had the first break here. So we broke above that level, all right, and created a first break. We then had here a true break. We broke above this level, which was the high of the first break, and created the true break. And remember, guys, when you're drawing out first breaks, true breaks, because I know some of you are struggling with this in courseworks and things like that, the line is always drawn from the left. It's from this liquidity to the left. So sometimes people are drawing it from like candle bodies. Sometimes people are drawing it from the right and they go, right, this is my first break. That's not a first break. That is the high of the first break move. The liquidity is above these highs. So when you're drawing out your first break levels, you're drawing it from left to right. So you look at where the high of the range is. So this is our last bearish range, this range high to this range low. We've only had wicks below that, so we don't class that as a new range. So this is our last bearish range, okay? And this here is the high of that range, so that's what we're breaking. So when we're looking for a first break, we're looking for price to break this high. Does that make sense for everyone? Because I know sometimes on the drawings and the markups, that's a little bit confusing. We always draw first breaks from the left to the right because it's a break of structure. This is the bearish structure, and this is price breaking it. Price has broken it here, but then has continued going higher. Okay.
Hey, how can you put your true break there? Because I probably would have put it on the next one. Because for me, that's a bit of a, I'd say that's a bit of a shitty true break. That makes sense, because that's just sort of like, would you not put it on the next one to be more certain, or are you just happy with like the true break being like that?
Yeah, well, it's had a pullback, isn't it?
Yeah.
It's had a pullback and it's left a high.
You quit that pullback, would you?
Yeah, because it's broken candles. Look. See? It's broken these candles and taken their liquidity. So if you can see price pulling back, Okay, it doesn't need, because then it's like, well, where does the line stop? Are you saying that that's not enough because it's one candle and therefore if you had another candle it would be?
Nah, it's just not really deep enough. Like it's kind of like, do you know what I mean? It's not even hit the 50%, is it? But I know, mate. This
doesn't
is
need
where
to.
like, I'd never catch a trade there anyway because
Yeah.
I
I'm
see it.
not I'm not catching a trade there. This is just
No, no, I'm not saying that. I just, as in like a true, for me, it just like, it wouldn't, I don't know. I'd have probably waited for that next candle up there and then
Okay.
had that wait for the true breaker there.
If you want to do that, that's what you're welcome to do so.
Yeah.
It's up to you. Whatever, look, at the end of the day, you can interpret it however you want. That for me is a true break. And then I've got another true break here.
Can I ask something quickly?
course
Sorry,
you can.
Chris, I don't know if I missed it, but so see how your first break is going right through that wick?
Yeah.
How come it doesn't just go like to the wick and then the high point of that wick being like the next one? Just because it needs to have the
I'm
pullback
with
and it
you.
needs to be like a cleaner
Very
second
valid
move.
question. Very valid question. So, if it's just a wick, we know that it's only a false break.
Mm-hmm.
Okay, and for us to have a first break, price has to close above. Okay,
Oh yeah. Okay.
it has to close above. Now, if it hasn't closed above, then technically it's just a first break. But I'll be honest, these days I'm going a little bit further with that, for my own trading anyway, and I would recommend that you guys do as well. Okay, for me, if I haven't got at least one more candle closing above that level or outside of that level, for me that's not enough. Because let's just imagine for a moment, in fact it's a white candle, isn't it? Let me change the color. Let me just zoom in a little bit. Okay, let's just imagine for a moment, right, that price had done that. Oh, I can't, it's snapping, but you see what I mean, okay? Price had done that and had closed above, but then had immediately gone back below like it has done there. With the greatest respects, what is the difference between that and that? It's not much, is there? You're talking about, you've got a little bit of a closure above. That doesn't indicate to me clearly that the market is breaking above a level. That just, if I go up like to a 20-minute time frame, that will now just be a wick. So for me now, what I'm doing, and I'm talking to this with a lot of students now, is I want at least one more candle outside of that range to show that we've got a bit of a follow through. A candle closure above, ideal. A second candle close above, perfect. Just I want that little bit more confirmation that this isn't just a liquidity grab and then a reversal. So technically, if you've got a candle close above, it is a first break or a true break. But I want a bit more conviction these days because I've known lots of situations where you have a candle close above and price just reverses on you. Now, if I'd gone up to a 30-minute time frame, that candle close above would have probably just been a wick. So I want a bit more follow through, a bit more continuation to really clearly. So like I've got this next break here, for example. I've got this next break here. I want, you see how that I've got that candle close above. That would be enough for me to say, yes, this is a first break because price has developed outside of that level. Make sense? Cool. So coming back to this overall structure, okay? First break, true break, true break. So I know a lot of people were looking for this range high for sells, okay? And I fully understand why, by the way. Okay, I fully understand why. However, what we have to have happen is we have to have a shift. Now, where some people were getting stuck on this is they saw this external liquidity grab, which was our last, I think it was our last bearish range on the hourly, potentially. Yeah, this was our last bearish range on the hourly. And they were going from this chart down to the 3-minute chart, okay, to then start looking for sell opportunities. First break, okay, true break, okay, and then I think there was some sells from here. Now look, I understand it, I do understand it. But there was a bigger picture at play here, remember, okay? And this is where building a narrative and building your story from the top down is really, really important. So we go back to our higher time frame narrative, okay? We are below these external levels. We've had a very clear accumulation, manipulation, and it looks like we're getting distribution. And all you have to do is sometimes you have to look at the candles. Like, what do we notice about the bullish candles compared to the bearish candles?
They're a lot bigger.
A lot bigger, a lot stronger. You've got imbalances being left behind. Who would you say is stronger right now? Just up to that external line.
Fucking hell, you're right.
You're muted, Lou.
No, sorry, I was telling Jack to go get me tea.
Okay, sorry.
Mate, I'm annoyed because Thursday I was gonna buy GU and EU and I fucking backed out of it and went
Yeah,
for
you
them.
should have done.
They-
Should have done.
I'm fucking so annoyed as well.
So this
I
is
didn't, mate, there was something like just I think it's because I just had a shit to start the day and the night. I didn't analyze the market before.
yeah. So
Should
this
have.
is why the it's not enough to just go in every day and say, hell, hey, what am I looking at today? Because what you'll do is you'll look at that bearish range without understanding the bigger picture, and you'll go, oh, the market's going to go short from there. And I do get it, guys, because technically that is a valid sell setup. However, what we were looking at, and me and Sam were discussing, is, well, what if this is the low of the week? What if this therefore is the distribution? What if DXY has grabbed all of the liquidity it needs in the short term, and now we have shifted? Now look, we haven't until Friday had a bearish shift on the hourly, but the 15-minute gives us a really good clue that we are, at least in the short term, shifting bearish. Now look, it catches all of us off guard. I took a sell, as you guys probably saw, I took a sell on EU, because I was like, oh, we've had a nice bearish shift back down after, we've grabbed a load of liquidity. We've got a higher time frame first break or false break and trap, okay? To be fair, when I did my review of it last night, I was like, do you know what? I was a little bit hasty, hadn't quite had the confirmation, and as Sam quite rightly corrected me, we had a larger bullish range at play, look. Okay, and this was just an internal shift. Now, this goes back and translates exactly to this section of price here. So, price has had an internal shift. This is a larger hourly range. Price has had an internal shift. Now, what's the rule if we have an internal shift? When can we get back into that market in line with that hourly momentum?
Have an internal shift back.
When what?
When you have like a shift back. I
Yeah, but on what time frame?
Hour? No, yours
No,
is 50.
no. So this is what catches people out. So if we are internally bullish on the 15-minute time frame in an hourly bearish range, the rule is drop down one time frame and wait for that time frame to shift back in line with you. Now, we had a first break on the 5-minute, okay? But there's no pullback here. We haven't got any structure being taken, okay? Yes, there are bullish candles, but those bullish candles haven't broken any structure, okay? So that's not a pullback, okay? We've had a first break, but we've only had a first break on the 5-minute time frame. Now, I do understand why some people got caught on that, because the 3-minute technically did shift, because on the 3-minute, you do get a pullback, and you do have candle structure swept, look, so you have got liquidity grab in there. But the 5-minute for me is still quite clearly bullish. So I can't remember which way I traded this or what I traded. I think I took USD or I can't remember. But anyway, long and short of it is this market hadn't shifted back bearish, which is why that sell position had lost. And in fact, if we had waited, I think on USD CHF, if we had waited, and I think some of you guys did catch that on Thursday, this is the one that we took. USD CHF gave us quite a nice false break here, a trap here, and then we traded into that trap. Euro USD didn't really give a setup until Friday, okay? And we traded that trap down there, okay? And that was the position that we ultimately ended up taking, all right? Now, this is complicated price action, guys. And some of you are probably sitting here thinking, fuck, this is confusing. And I get it, it is confusing. But it's really important to try and understand what might be happening from a bigger picture, because from the low of this week on a Wednesday, we expected price to pull back into this range for a couple of reasons. Not only because of the AMD cycle, but also because of the fact that DXY had taken its liquidity and had started reversing. And that then opens up lots of opportunities. Now, like I said, I got caught short on this range here, expecting market to continue. Another reason why you don't trade from your phone, guys. I did my analysis in the morning. I was on the way out to the dentist. I saw this little sweep here and I was like, that's a false break trap. I'm going to sell it. Forgetting the fact that we are in a bullish range. And actually what was happening here is we had a shift. Okay. We had our first break there. We had a true break here. Okay. The purists will probably see a complex reversal down here as well, because we had the trap sweep. All right. And you had a pretty fucking beautiful buy here. I know Animesh, you caught this or marked this up, and a few of others. A pretty lovely buy here that ran on and on and on for about 10 to 1 if you'd caught it and held it. Beautiful trade. In line with momentum by this point. We had that liquidity sweep there. We had our first break, true break, first break, true break, complex reversal as well. Nice little retest, MSU in there. I mean, pretty textbook setup. I managed to catch the other side. I had to be a little bit kind of hasty with this one. I didn't get my first break till a little bit after, and then didn't get my true break until probably a little bit further down, really. I think it's the 1 minute structure I was using. Yeah, so it's clear on the 1 minute, first break, true break. You could have probably had your first break there, to be fair, on the 1 minute. And then true break, I waited. I just waited for a little bit of follow through, but I saw the dollar just dropping and dropping and dropping on Friday. And I was like, I've just got to try and get into this however we can. And so I didn't really get an MSU on it. I just traded the, I traded one of these little pullbacks. Again, I was sat in the dentist waiting. So I think it was around here I got in on one of these pullbacks. I mean, I suppose there is an MSU there, to be fair. But the reason why I was happy to take that sell, and the reason why it played out, is for all of the reasons that we've just discussed. We look at the DXY, it's really, really high. Look, it's been pushing higher since the 28th of October, way back to 17th. If we go to its extreme low, 16th of September, it's been pushing higher and higher and higher. And then this last leg's been since the 29th of October. So, relatively short space of time, about a week or so. 2 weeks maybe. About a week. But it's pushed quite high in that week's period, taking out all of this liquidity. So it's asking for a reason to come short. What's the best thing about next week, guys? What's the best thing about next week?
Second week of the month?
Not that.
No?
Is
it a bit weird this week because it's like the first week of the month as well?
We get a lot of news, but the government shut down, so it's not really playing for that much. What's great about this week is we are still above the equilibrium. We've tagged it, but we're still above the equilibrium. And we've got all of this liquidity down here, all of these key psychological levels. We've got the 99, 98.75, 95 to come down to. And price has now shifted. We've got a first break, true break on the hourly. So we have now bearish price action, okay, from a high. So that's great. We should now just be able to ride this down. Maybe we get a pull-up start of the week. Maybe we get a lovely little false break and we can trade that into. Maybe
high of the week on Tuesday and it's payday.
Say again?
High of the week on Tuesday and it's payday next week.
High of the week on Tuesday and it's pay. Oh, for you?
Yeah, with that chart there, for sure.
Yeah. So you want your high of your week here, yeah?
Yeah, on Tuesday, if we can get that, definitely.
Yeah. All day long. So, there's a real value, guys, in spending time not just looking at the market right now and what's happening today and where are my liquidity levels and where am I going to sell from, where I'm going to buy from, and spending time on these higher time frames. Because although we use the higher time frames to support our trade, really the higher time frames are driving our directions. So you have to understand what is happening as from a bigger picture. Where is price likely to go next? If we're below,
come on.
If we're below, if we're below external liquidity, okay, where is price most likely to go next, guys? In a bearish range, if we're below external liquidity, where is it most likely to go next? Internal, right? So I can't remember who I was speaking to someone yesterday, maybe it's Sam, and we were talking about stacking confluences. It was you, Sam, wasn't it? Yeah. We were talking about stacking confluences, and what you have to do as a day trader, okay, always, is we don't trade mechanically, okay? We have a mechanical rules-based system, as in liquidity sweep, false break, true break, MSU, all that stuff, right? Okay? But there's still subjectivity. So we have to trade confluences. So what you have to do as a trader is you have to go into the markets every single day and you need to look at both bullish and bearish scenarios. And you have to stack confluences in one favor or another. Because remember, there's only two outcomes always. What are those two outcomes?
Win or loss?
Nope.
No? Continuation or reversal?
Nope. Every single day, the market's going to do one of two things. It's going to either do what or what.
For long or short.
Exactly.
Go up
It's
or
either going to
down.
go up or it's going to go down. Okay? It can't do anything else. All
Yeah,
right?
it's a win and lose. Because if you're selling, it's either going to win or lose. You're doing that because you're going to go up or down, isn't it?
No, because I've not told you which direction I'm trading in yet.
Yeah, but it wouldn't matter. Whatever direction, the market's going to go up and down. So either way, you're going to win or lose.
No, because you're
Yeah, but
missing
if you put a chart, yeah, but if it's going to go up or down, yeah. So no matter what you do, whether you buy it or sell it, it's going to do one or the other. You're going to win or lose.
It's not the point I'm trying to make, bud. Right, so the market's either going to go up or down, okay? So you have to decide which direction you want to trade that market in, all right? I'm going to mute you, Dom. You're gonna have to decide whether you want which direction you want to trade the market in. It's either going to go up or it's going to go down. It can't do anything else, okay? Sometimes it goes sideways, all right? But really, it's going to go up or it's going to go down realistically, okay? So every single day, you need to come to the market and you need to decide whether you want to take it long or you take it short. Now, the reason why you make that decision is because at the moment you're going liquidity, momentum shift, and all that sort of stuff. Sometimes it's not as simple as that. And when you get to a level of experience where you can not necessarily predict the market, but you have all of these confluences weighing up to one direction or the other, what you've got to do is you've got to stack them and literally stack them. So you've got to say, right, what are the confluences supporting my trade to go long? What are the confluences supporting my trade to go short? Now, if you've got an equal stack, if you've got two piles this high for each of them, then you don't take the trade because you can't decide and it could go either way. What you want to try and do every time you come to the market is have a bigger stack in the long direction than you do in the short direction, okay? And then over time, those stacks might equate and then eventually reverse. And this is when the market's reversing and now you take the sell. Understanding the higher time frame perspective as well as the lower time frame, and I know that we get lost in the lower time frame sometimes, is really, really important for a well-rounded trader. So try and get a good understanding of not just what's happening today, but what's happened from the start of the week, from last week, where prices in relation to maybe last month, because that could be relevant, and try and build a picture for where price is likely to go next. Because it might just be that additional confluence that you have missed, for example, the weekly cycle this week, and the fact that we were below those external levels, might be the reason why you didn't take the sell on EU on Thursday, okay? That being said, if you're trading safely, using good risk management, every single time you lose a trade, and you lose a trade well, i.e. you followed your confluences and you followed your strategy, and the trade just happened to fail, that will normally tell you where it's going to go next. Because the trade failing on EU on Thursday, just like my trade failing on EU on Friday, told me that actually I called the direction wrong and I need to take it the other way, which is why I was able to get that USD CHF trade out of the market and didn't just sit there trying to, sell USD over and over again, all right? Because if you're wrong about the market and your piles were relatively equally stacked and you've done your stacking properly, then usually that loss will maybe take one confluence from your short pile and add it to your long pile, and that might then give you another opportunity. So the ability to flip that bias quickly if you need to, can sometimes be really powerful. All right, guys? So hopefully that's been helpful. This week was a tougher week, okay? It was a tougher week. I know a few of you guys came out with some good profits and a few of you struggled, okay? But you're going to have lots of weeks like this. It's going to happen. Remember, me and Sam are here. If you need us, reach out to us at any time. Give us a message. Just give us a shout. We're always here and happy to help when you need us, all right?